Hey guys, thank you so much for tuning into this week's episode of the Real Estate Talk Show, Home Buying 101 with Sebastian Cordoba, Mr. Clear to Close. Guys, this week I'm very excited because we're going to be talking about very important topics. We're going to be talking about, is right now a good time to buy? How is the market doing? Is it more of a buyer's market? Is it more of a seller's market? But more importantly, we're going to be going over the different common mistakes that home buyers and investors are making, as well as sellers, during the home buying process. But I think that one thing is very important is what should you be doing while you're getting ready to buy a home? Very important topics, guys, but I'm super excited because I have a very special guest this week, guys, and I want to make sure you guys please give him a big round of applause. I have Wilfredo Miguez, real estate agent from Keller Williams, guys. So please do not miss it. Please tune in, and thank you so much. Guys, and please give it up because we have a very special guest. We have Wilfredo Miguez, the Keller Williams. Please give it up. Thank you so much, man.
Thank you so much, Sebastian. I'm so happy to be here. Thank you so much for the invitation, and I'm very excited for the opportunity to share some of my experience with your audience today.
Exactly, and that's very important, Will, because I think what we're here to do is to educate, give some information back, and be able to educate and give our experience, right? So how's the market going on? I mean, tell me, because it's a very hot topic. I mean, what's going on right now? What are you seeing?
Yeah, no, it's a great question because I've always been asked what's going on in the market. Is this a good time to buy? And this is a very interesting time in the U.S. economy's history. And of course, real estate is very intertwined with macroeconomics and the microeconomics of each market. So we're in a very transitory phase right now when it comes to the real estate market. Just a couple of months ago, we knew that interest rates were 2-3 times higher than they were at their lowest point in 2020. And that was scaring off a lot of buyers, understandably so. Not just scared off, but they were literally being priced out. So a lot of people who wanted to become homeowners were simply not able to participate. So the numbers just didn't make sense for them. This made it so that, as we saw over the last few months, inventory started to accumulate. Whatever inventory was on the market was accumulating a lot of days on markets. But at the same time, this presented a unique opportunity for those buyers who were able to participate, who were able to either qualify for a mortgage or were able to buy a home cash, in other words, without financing, because they had a lot less competition.
Okay.
This made it so that they had a lot more leverage. And although we never technically transitioned into a buyer's market, not by the technical definition, a lot of the buyers who were participating in the market had a lot more leverage. They were able to take advantage of sellers who had to sell for whatever reasons, personal or business related. And they were able to get much better pricing and terms.
Wow.
In fact, Keeping Current Matters just recently came out with a statistic 2 days ago noting that in the last quarter of 2022, I think it was 42% of transactions included a seller's credit.
Wow.
Not just a reduction in price, which is common because it doesn't matter where the property was priced. What matters is if it's worth what they were asking.
Okay.
Seller's credits in the forms of paying down points or paying for closing costs and things like that. And so that's very interesting because we didn't see that at all in the years following the pandemic. It was the complete opposite. You had to waive all sorts of contingencies. You had to go many thousands of dollars over asking. So we saw a very different dynamic, right? The closest thing we've seen to a buyer's market since the years right after the 2008 pandemic.
Okay.
What's going on now, though, is it seems like the economy is starting to show that we're heading in the right direction.
Okay.
As you know, inflation was the headline topic of 2022. And, it's important that the Fed took an aggressive measure against inflation by increasing interest rates. Nobody wants inflation. For as much as we would love lower interest rates, higher inflation is 10 times worse. So it's great that we took an aggressive measure against inflation. At the same time, that is what led to the conditions that led to, fewer buyers participating last year. Now we're seeing that as the economy is heading in the right direction, we are seeing lower interest rates.
Okay.
The Fed is starting to take the pedal, the foot off the pedal, as they say.
Yeah.
And with interest rates now closer to 6.2%,
Yep.
more buyers are able to participate in the market, and we're now starting to see a slightly more competitive market.
Wow. Okay.
Which I love because I feel like at the end of the day, the goal is for more people to become homeowners.
Yes.
We also want people who are looking to sell to be able to sell in a relatively fast period of time. And so we have a more sort of normalized market in the coming months if the economy continues the trend that it's currently headed in. So very exciting time.
Wow, so that's amazing. So guys, just to kind of recap, because there was a lot of good information, Wade Fidel, and what we're seeing is basically a transition, right? So what you're saying is, the question, is it more of a buyer's market? Is it more of a seller's market? But what you're basically saying is, okay, it's technically not a buyer's market, but there's a little bit of an advantage, or now a buyer has a little bit of more legway or leverage, right? So tell me a little bit about that. I mean, do you see it? I mean, if somebody to ask you, hey, now it's a buyer's market or is there a seller's market? I mean, what's your kind of short answer to that? What do you think?
It's very much still a seller's market, both by the technical definition and also because of the fact that when you look at the homes that are most appealing to your retail consumer, those are still getting offers. Those are still selling in a relatively short period of time. Just because it seems like things are slowing down doesn't mean that the houses that are more appealing to you as a buyer are not going to get multiple offers in some cases. There just might not be as many buyers as they were before, but the moment you have 2 offers on the table, it's already a competitive situation, right? So yeah, that's my answer.
So that's amazing. So listen, and I kind of want to go back because you're a fellow economist.
I am. Yes, I am.
Like myself, so I love it. So kind of going back to what you were talking about, there's a lot of different factors that the government's trying to do to reduce the inflation, right? Bringing up the interest rate, government spending. These are different things that's going to try to reduce this inflation, right? So what kind of effect has that had on some of my clients or anybody looking to buy a home is higher interest rates brings that monthly payment to a higher amount, right? Then that's restricting them to a lesser amount because that debt to income ratio goes up.
Exactly.
Right. All about debt to income ratios, and we can talk about that a little bit more about common mistakes. But I think, importantly, I mean, how's the market doing right now? So what you're saying is, okay, is now a good time to buy? I mean, should you? I mean, people are saying they're going to wait. They're going to see the market crash. If somebody were to ask you, hey, Will, you know what? I'm going to wait because I think June and July the market's going to crash. Or Will, should I just start the process now? What should I do?
Well, here's the thing: is obviously everybody has their own financial goals, timeline, restrictions, and so obviously you have to find the time that makes sense for you. But the moment that you qualify for a loan and you're in the price range where properties that would interest you are all of a sudden in play, that's the time that you should go and buy. Obviously, real estate is a cyclical industry, and so we will experience ups and downs. But that doesn't mean that you should wait to time the market when there's a sort of valley or a down period to then go and buy, because the fact is that if you're focused on getting a 5 or 10% discount from the top market value, that would be great. That would be a plus, no question about that. But what makes real estate such a powerful wealth generation vehicle is all the other factors which only come into play when you actually own the piece of real estate. So from that perspective, it's not timing the market, it's time in the market. And we could spend a whole other 30 minutes or an hour talking about the fundamentals, but it's just accumulating equity, owning an asset that appreciates in value as opposed to paying rent where you don't own the asset and instead your rent might be going up, right? All the different tax advantages. I always like to say when it comes to real estate, the IRS is your friend. And then just everything else that comes with real estate having to do with leverage. I mean, you're making a down payment, so you're only putting down, let's say 20%, and now you own an asset in its entirety. You have control and all the gains that come from it. So when the property appreciates 5%, that whole 5% is all yours. So the ROI turns out to be much greater. Taking out a home equity line of credit down the road so you can buy a second property that maybe turns into an investment and you have cash flow. I mean, there's just so many powerful ways to generate wealth from real estate. And none of them have anything to do with timing the market.
Wow.
The important thing is to get in, start building equity, and down the line, things will start paying off.
Amazing, guys. So amazing. I love the topic, guys, and I hope you guys are all writing this down because this is amazing. I got it right here, me disco duro. So, I think, a couple 2 topics that kind of stuck in my head maybe for the listeners that are first-time home buyers. REO, right? So,
ROI.
ROI, so rate of return of your investment, right?
Return on investment, right.
So what you're saying is, okay, if you're looking to make an investment into real estate, right, how quickly can you get that investment back? How quickly can that investment return itself and be able to make that money back and more, right? So, for example, what you're saying is what's the minimum amount down payment you can put into a property, get into there, have itself pay itself off, or bring that initial investment back, right? It's how quickly can you get that return.
Yeah.
Another piece is seller credit. I think we talked about seller credit can be applied, like you said, to different topics, right? So to different costs. So seller credit can be applied towards closing costs, which is prepaids. It's also costs for the attorney, for the bank fees, or like you mentioned, points, right?
Right.
So in order to reduce that high interest rate, you can purchase what's called points in order to reduce the interest rate to a level that's going to benefit you per month and put you in a better financial position per month, right, guys? So very important information. I love it. And I think, you know, do you want to leave us off with any of that before we kind of transition off to the common mistakes, or what's kind of very important that listeners are making sure that they take out of what we just kind of talked about on how's the market, is it a buyer's, seller's market, and kind of what's going on?
Yeah, you know what I think is interesting is that every market is unique and every time period in history is unique. And so whenever you're ready to buy a house, you might be in the middle of a real estate boom or a real estate downturn or maybe more of a stable market. Whatever is going on, it's important to, number one, work with a professional who can help you understand the dynamics of the very market that you're competing in. And we want to get very granular here. We want to understand the specific data pertaining to the town you're looking in, the specific price range that you're competing in, the type of property, condos versus single families. How many days on market are those types of properties accumulating? How much over or below asking are those properties selling for? Equipping yourself with that information, because oftentimes one mistake that a lot of buyers make is they assume that the asking price is what the property is actually worth. And the asking price is really nothing more than just a pricing strategy on behalf of the seller. And it's my job as your buyer's agent to determine where the seller is trying to price that property and what strategy they're pursuing. Are they pricing high to see if somebody bites? Are they pricing low to generate a bidding war? So that type of information is it's fundamental for you to grasp before you actually embark on the home buying process.
Amazing. Amazing.
Yeah.
Yep. Sorry.
And I'll just add one more thing. I mean, when it comes to the cyclical nature of real estate, oftentimes, you know, we'll be in a situation where we might have multiple offers, and most likely than not, you're going to find yourself in one. If you know, fall in love with a property, well, you're not the only one, right? So we want to have a really good understanding of what levers you can pull when you're crafting your offer, presenting the offer to the seller, so you understand what risks you're taking on when you're waiving certain contingencies and how that's going to impact the way that the seller is going to receive your offer, but also what risks you don't want to waive so that you understand exactly what it is that you are, you know, that might be holding back your offer from being accepted in certain cases. And on the flip side, when it's not a competitive market, you want to work with an agent who can make the most of the circumstances so that you're able to get the most amount of credits, the most amount of, you know, the highest price reduction possible, the best terms possible. So whichever circumstances we find ourselves in, whether it's a boom, whether it's a downturn, it's important that we, you know, work together to make the most out of the transaction.
All right, guys. So the next important topic that we're going to be talking about, right, is what should you be doing while you're in the process of buying a home, right? Very important questions that we have. So, Wilfredo, what's the number one advice, or what should somebody be doing before they're even starting the process of buying a home?
Sure. So, first of all, it's never too early to sit down with either a real estate professional or a mortgage broker when you're thinking about buying your home. You really want to start asking questions early on, because there's a lot of things that you can figure out before you jump into the process, right? One of the first things I like to talk to my clients about is looking at your goals. Obviously, when you're looking at becoming a homeowner, you already have specific needs that you want met. You know, a specific neighborhood that you're interested in, a specific size of the property that you need for yourself or your family, or a specific location that you need relative to your commute, or whether you know you're taking a car or taking the commuter rail, whatever it might be, those needs are sort of already a prerequisite of your purchase. But what's most important, what oftentimes people neglect to think about, is their long-term goals. And so here's where I help my clients think about all the creative ways that they can think about approaching this transaction to make the most out of it. So most Americans come to buy a house every 7 to 10 years on average.
Wow.
Some people only buy one house. Some people buy multiple houses very quickly. But on average, 7 to 10 years. So, you know, a lot of times people come to me and they say, I want to buy my first property because I'm tired of renting. Excellent. Great way to approach it. At the same time, we already know that this is not going to be your forever home. So instead of maybe buying a condo or a single family, we should look into alternatives such as buying a multifamily and becoming a landlord, such as buying a 2-family, a 3-family, and putting yourself in a situation where you now own a building where 1 or 2 other tenants are now paying the vast majority of your mortgage.
Amazing.
What's beautiful about this is that when you move into your forever home, 7 years on average, now you find yourself in a situation where number one, you have a bunch of equity accumulated that you can use to help put more down towards your second property. Secondly, you don't need to sell that building. Ideally, you're keeping it on forever.
So it's cash flowing almost, like it's paying itself off.
Cash flowing. It's going to help you when it comes to qualify, because that's going to be considered into your debt to income ratio. So now all of a sudden you can afford more. And besides how much you qualify for, once all of that's done, once you move into your second or third home, now you have cash flow, right? You have a building that's going to continue to accumulate equity, appreciate, and generate income for you to live the quality of life that you're hoping for. Another thing to consider, even if you're looking to only buy a condo or a single family, is buying something that's maybe a little bit run down or maybe in a bit of a more up-and-coming neighborhood. There's nothing wrong with buying something in a well-established neighborhood or something that's just been built at a retail level. Oftentimes, these assets do tend to perform very well in the long run. But when we talk about sort of fast-tracking your wealth generation process or timeline, when you find something that needs a little bit of extra tender love and care, as they say, TLC, you now have the opportunity to make that investment yourself. And sure, this might require an additional few $1,000s or maybe even taking another loan. But at the end of it, you come out with a product that's much nicer and it's worth a lot more than what you invested in it.
Wow.
And this is another powerful way of fast-tracking that wealth generation timeline, owning something that's worth a lot more, which can then, serve as a collateral for another purchase. Buying something that cash flows on the side if the first property that you bought was, for your own residential purposes. So, whatever it might be, and these are just a couple of examples. I've talked to other clients who definitely only want to buy something near their school or workplace in the city, and then we talk about like maybe buying something where they could rent out a couple of rooms to roommates or something like that. There's really a whole range of different scenarios that are worth exploring, and that's the idea, exploring those scenarios, so that when we go through with this first transaction, we're making the most out of it to set yourself up for a bright financial future.
Awesome. Wow. So that's amazing, man. So basically, what we're coming to is an absolute. When you're getting prepared, you need to make sure you're getting paired up with the right person that's going to be able to understand what your future plan is, right? Because what they're not looking at is what your short-term goal is. They're basically looking at is, okay, you want to buy a home now, but what do you want to do in 5 years? Is this going to be your forever home, or do you see this being the first of many, right? So what's the best way of structuring the homes, right? Which what you're saying is start with a multifamily, and then you purchase the next one as your primary, where then you're creating cash flow from that original first property, and so on. So you keep moving forward and creating that wealth, that portfolio, right?
Absolutely right.
So I mean, that's amazing. I mean, I think that's one of the biggest mistakes, that if you're not working with a professional who understands what your goals are, and they are just worried about making sure that first transaction gets accomplished and done and closed, they're not really looking at what your future best interest is, right? Where the best way is if you're looking at own multiple properties and deal with tenants, and that's okay with you, another full-time job, because it's not easy. Then listen to a professional who's going to be able to guide you and put you in the path to be able to make that happen, right? So what's another thing that you think is very important for somebody, especially in the beginning stages of them starting the home buying process, right? Let's say, their credit's okay, but their income is all, it's here and there. They don't know what to declare. I mean, what's another good important piece that you want to, leave us with,
Yeah, so one thing that a lot of people are maybe not aware of is all the different types of mortgage products that are available for buyers. And once we've established what your goals are long term, and we identify the right track for you for this one transaction, it's important to get in touch with a mortgage broker such as Mr. Clear to Close here, who can help you identify the right product for you. And people are sometimes shocked by how many different types of products there are, and how all the variables that are taken into account. This period of time right now, I mean, tax season just started a couple of days ago. Right? So as people are getting ready to file their taxes, I would say if you're also thinking about buying a house this year, you should talk to somebody like Sebastian Cordova here to take a look at your taxes first, so we can identify what adjustments might be necessary to get the right loan for you. So, Sebastian, if you don't mind elaborating on this a little bit.
Yeah, man, I love the question. So, what Wilfredo is referring to is there is something that we actually use. There's different factors that we determine whether first you qualify and second up to how much, right? And if you don't, we'll put you on the path where you can purchase in the future, right? But briefly talking about the different factors, it's your credit, employment history, it's your income, it's also your savings, and the collateral, what kind of property you're purchasing, right? But what you're talking about specifically is your income. How much income are you declaring, especially if we're talking about self-employed borrowers, right? So quick little, a brief summary is, if you're self-employed, you're declaring, yes, Schedule C with your 1040, so you're self-employed on your personal taxes, right? But if you have any corporate tax returns and you declare a K1, that's a whole different type of tax return that we can also use, right? But what's the double-edged sword there, right? Wilfredo, is if I declare I'm making $1 million, that means, yeah, I'm going to buy a nice home, but I'm going to owe a lot of money to the IRS, right? So it's very important for you to work with your accountant, with your CPA, to understand what you can declare, because you can't declare anything that you can't legally provide proof of. But at the same time, we need to also be able to work with you so you understand when we do the 2-year average of your business tax returns or your personal tax returns as self-employed, that you're going to be able to qualify based on that income, right, and that debt to income ratio that we're talking about, right? So depending on the loan program, like you said, there are different percentages and ratios that we can borrow up to, right? So the more income that you are declaring, yes, you pay more taxes, but at the end of the day, you're going to be able to qualify for more home. So I think at this time, yeah, taxes are starting to come around. It's actually right now is the tax season, so I think it's very important for you to sit down with your accountant, sit down with your loan officer, and make sure that you're working as a team to make sure that you understand how much income you're declaring, how much income you're going to have to pay to the taxes in the IRS, and at the end of the day, how competitive am I going to be in the market, right? Is this going to, can I buy this year, or should I maybe prepare myself for next year? Right.
I love what you said there about working as a team, because this, home buying is really a team effort, and it starts with real estate professionals, mortgage brokers. You're also going to be engaging significantly with a real estate attorney, and throughout the transaction, other players will come into play. An inspector, a contractor. Maybe you need to talk to an architect who can help you turn a house that looks like has potential and help you see the vision. You're going to talk to roofers, HVAC experts. You really want to make sure that you're working with someone who can be that point of reference to other people in his network, her network, to put you in touch with the right professionals to surround yourself with, to make the most out of each transaction. And this can really make the difference when it comes to, a market like this. And this doesn't even have to be a seller's market or a buyer's market. The fact of the matter is that this country is going through a severe shortage, inventory shortage.
Yes.
And for that reason, it's really important to get creative when we're looking at houses and understand what can be done, what potential lays behind the walls, how you can reconfigure the layout, how you can add value, add square footage to make a home work for you. So everything from the beginning, from working with a credit repair expert if your credit is not quite there yet, with a financial advisor who can set you up in a plan to save up for a down payment, a mortgage broker to make sure that you're able to qualify for the best products and the budget that's right for you, someone like myself to guide you through the process, a real estate attorney to negotiate on your behalf for the best terms possible on the P&S. I mean, there's really so many people that you're going to come in contact with throughout the whole transaction. And so you want to make sure that everyone that you engage with has your best interest at heart. And one great way of making sure that that happens is to work with professionals who have a relationship with the other professionals that you're working with. Because I know if I'm referring someone to Sebastian or vice versa, we're going to take care of each other, because we don't just care about the client wholeheartedly. We also care about the relationship that we have with each other. And so from that perspective, it's important to, again, work with somebody who's experienced, has that network, and will put you in touch with the people who will provide a great service for you.
Amazing, guys. So just to kind of recap, I mean, guys, that's amazing, because I'm excited. I mean, that makes me kind of want to go out there and buy a home and build a good team right now. I mean, that's amazing, right? So, listen to Wilfredo. I mean, what he's saying is absolutely true, guys. Whatever team you guys do decide to work on, it's very important that you do get a team that's looking out for your best interest. You want to work with a team who already knows each other, right? And they can quickly pick up the phone call and get that solution for you if ever that problem comes. So guys, I appreciate you guys tuning in. I'm so excited because this information today, I know you guys appreciate it, right? But before we kind of let you guys go, Wilfredo, I want to make sure that you can give us some advice. What's the last piece of knowledge that you want to leave us with? And more importantly, what's the best way that we can reach out to you, please?
Thank you so much, first of all, for having me over, Sebastian. I really appreciate the opportunity. Look, there's so much to discuss, and I would encourage you, every one of you, to give me a call and let's sit down for a cup of coffee. The most important thing I would say right now is to not focus on the market so much as focus on your finances. Focus on your budget and getting yourself to that position where you're ready to buy a house. And once you're there, give me a call. We'll grab that cup of coffee and we'll go over your plans. The best way to reach me is at my cell phone, 617-504-2297. Or email wilfredo@o'connorandhighland.com. I help my clients in English y también en español. Muchas gracias.
Wow, Wilfredo, man, thank you so much, man. I appreciate you coming out.
Thank you, Sebastian.
Yes, no, you're welcome. And guys, thank you guys for tuning in. I am so excited because I think we got some really good information for you guys. And please subscribe, like it, share it, and hope to see you guys next week. Thank you.